As we mentioned, Tuesday evening in Washington, Wednesday morning in Asia, a key moment for the president. He's making his first State of the Union address in which he's likely to take credit for the improving economy and also the jobs market. Joining us now is BNP Paribas Asset Management senior economist Stephen Friedman. So, Stephen, as an economist, you're watching this speech and looking for what?
So I think what we're looking for at this point are signs of the forward agenda for the year ahead. So details on infrastructure, for example, immigration, the prospects for higher military spending. So things that are really going to impact consumption in the economy, inflation, the path of interest rates for the Fed.
Right, and that makes sense. But, a lot of what could affect the economy in terms of policy, in terms of policy by the president, you could argue have been done, perhaps. We're just waiting for them to carry out. Right, I'm talking tax reform in particular, some of the, dismantling of regulation. So is there really much that's going to be game-changing for the economy?
For the year ahead, it's hard to see that there's going to be anything that's game-changing ahead of the midterms. There's a lot of discussion about infrastructure spending, but it does seem that even though there is a clear need for that, the Democrats and Republicans both see that. One, we're already in a situation where deficits are going up, so it's a question of how you fund that. And there seem to be some philosophical differences about the role of the private sector in infrastructure.
Okay, and I mean, traditionally, do these speeches at all have any impact on the markets or the economy?
I think it tends to be fairly minimal, to be frank. I think it's more about casting one's accomplishments in the appropriate light, energizing the base, but also trying to broaden one's appeal. And that's something that is important for this president. As you know, his favorability ratings have been quite low.
Yeah. Stephen, you mentioned about the deficits that continue to be coming. I mean, I have a chart that kind of shows what we've seen in different administrations, #BTV318, and we have seen that the U.S. budget deficit grew after Reagan, after Bush tax cuts as well, and certainly is going to be the case when it comes to President Trump. But is there going to be a big blow-up number you're looking for during this report that comes out later on, that could maybe send even a bigger signal that yields are going to head higher at a time, especially when we're so late in this cycle?
Well, I do think that the Treasury has tried to prepare the markets for the refunding announcement on Wednesday. Going back to the November refunding, they already mentioned at that time that shorter dated coupon issues sizes should be going up. I'm not sure that there's been enough focus on that yet in the market, so there could certainly be a market reaction, as I do expect that you'll see higher coupon issue sizes announced at the 2-year sector, 3s, 5s, and 7s, and probably some issuance increases out the curve. So we could see some volatility in fixed income markets on Wednesday.